Good morning, it's Monday the 20th of December. Welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll start with a quick summary of the key macro data points coming up this week in the world's markets, and we'll then take a look in more detail at some of the bigger stories straight afterwards. So let's get straight to it. So let's start with a look at the economic numbers being issued this week. And the key numbers start actually on Tuesday, when we'll hear the latest sentiment of consumer confidence in Germany. And we'll talk about that in more detail in a moment. Also, the Bank of Australia meets, and we'll hear the latest levels of public sector borrowing in the UK. The latest consumer confidence figures in the Eurozone, and we'll hear the minutes from the last Bank of Japan meeting. Wednesday is a key day for assessing the growth, or otherwise, of both the UK's and the US's economies for the third quarter of the year. And we'll be discussing both of these shortly. And Thursday brings us GfK's assessment of the levels of consumer confidence in the UK. The US durable goods, the jobless claims and Michigan sentiment over in the US. And finally, as the admission that inflation is no longer transitory, we'll get the latest core PCE deflator figures in the US. And that's something that we'll take a look at in more detail in a moment. It's a relatively quiet week this week in terms of company reports, but we will hear on Monday from Nike over in the US, and on Tuesday, also in the US, General Mills. So, in the trading week before Christmas, both the earnings and macroeconomic calendar is unsurprisingly quiet. The focus is likely to be firmly on the headlines surrounding the new variant, which is spreading like wildfire across the UK. New daily infections are at 90,000, and the government is considering tighter restrictions, which could keep the mood in the market depressed. In addition to virus headlines, inflation is expected to remain a key theme, with plenty of attention on the Fed's preferred gauge for inflation, the PCE deflator index. So let's take a look at the more important stories of the week in more detail. Monday kicks off with Nike releasing their results for the second quarter. Now, Nike reported slowing growth in the last quarter as supply chain disruptions and factory shutdowns in Vietnam hurt growth. Revenue growth slowed by 12%, and that had little to do with demand. The share price fell to a 3-month low by the end of September, so the big question is, has Nike solved some of those supply chain issues which were holding back growth in the last quarter? The factories in Vietnam have since reopened, and demand in China has picked up after a strong Singles' Day. The share price has since rebounded to a 52-week high. Expectations are still quite low. Wall Street estimates revenue growth in the low single digits to $11.26 billion, and earnings per share expected at 62 cents. On Tuesday, we'll hear the latest GfK German consumer confidence assessment. Now, this dropped to minus 1.6 in December, down 2.6 points from 1 in November, and was well below analyst forecasts of minus 0.3. This was the lowest level in 6 months, as consumer sentiment was squeezed from two sides. On the one hand, the fourth wave in Germany means daily infections are surging, hurting morale. On the other, surging inflation is limiting the purchasing power of consumers. Inflation in Germany is at a 30-year high, with infections still on the rise and inflation showing no signs of slowing. Consumer sentiment is expected to continue to deteriorate. Expectations are for GfK consumer confidence to sour further to minus 2.5, so do keep an eye on the euro and, of course, the DAX. Wednesday brings us the final Q3 figures in both the UK and the US. Now, over here in the UK, the preliminary Q3 reading revealed that the UK economy grew at 1.3%. Now, the final reading is expected to confirm this rate of growth. However, this was markedly down from the impressive 5.5% growth experienced in the April to June quarter. Growth slowed in the third quarter as pent-up demand from the pandemic eased. Supply chain disruptions grew as infections started to rise again, and the pingdemic hit almost every sector of the UK. Whilst there were plenty of headwinds, Q3 data is expected to show that consumer spending remained resilient. However, it's worth noting that the Q3 data is rather stale now, given that it relates to the July to September period. Expectations are for Q4 growth to slow even further as infections continue to rise and following the working from home order. So do keep an eye on the FTSE. So likewise, we'll hear how things are doing over in the US. Now, the previous Q3 GDP figure showed that the economy grew at a rate of 2.1% compared to the same quarter a year earlier. The final reading is expected to confirm that 2.1% reading, and this would mark a significant slowdown from the 6.7% recorded in the second quarter. The slowdown in the third quarter can be attributed to supply chain disruptions, surging prices and rising virus cases. Whilst consumer spending had been very strong in the first half of the year, it slowed notably in the third quarter, rising just 1.7%. Whilst this was ahead of the 0.9% that analysts had forecast, it was still a sharp slowdown from 11.4% and 12% recorded in Q1 and Q2 respectively. So do keep an eye on the US dollar and of course US indices. And finally, on Thursday, it's the turn of the Fed's favourite measure of inflation, the core PCE deflator. Now, PPI is sitting at the highest level on record. CPI is at an almost 40-year high. And Fed Chair Powell recently acknowledged that the word transitory should be retired from use with inflation. In other words, inflation is no longer looking as transitory as the Fed initially thought. In last week's Fed meeting, the Fed accelerated the pace at which it's tapering bond purchases and pointed to 3 interest rate hikes in 2022 and a further 3 in 2023. The PCE deflator rose from 4.4% in September to 5% in October, and it's expected to remain above 5% in November. Meanwhile, the core PCE deflator is expected to rise to 4.5% in November, up from 4.1% in October. So do keep an eye on the US dollar and US indices. So that's all the big stories in detail. Let's wrap up with a look at the dividends due this week. In the FTSE 100, we'll hear from British American Tobacco, Evraz and Halma. In the FTSE 250, it's the turn of Mercantile Investments, Integran Fin Holdings and Law Debenture Corporation. So there you have it for the final week up to Christmas, and if you're a new viewer of our regular videos, why not click on that subscribe button just to make sure you don't miss our regular market updates, and just as importantly our special market analysis videos as soon as they're released. And you may want to keep an eye out for our share tips for next year, which we'll be releasing very shortly. And of course, if you're interested in the markets, do let me remind you about our app, which you can download from the App Store to your mobile phone, which gives you a whole host of useful functionality as an investor. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great Christmas week.